Okay, so our discussion for this session will be agriculture. Agriculture is covered by IAS 41. For the Philippine version, that is PAS 41. Basically, it's the same naman. So for our topics or the concepts that we will be discussing today, that's going to be subdivided into five. We will be discussing the objectives and the scope of the standard. We will be discussing the various definitions. We will also be having the recognition and measurement, as well as the accounting for government grants relating to agriculture. And finally, we will have the disclosure requirements. So to start with, let us have already the objective and the scope. So from the title of the standard itself, which is agriculture, so the objective of IAS 41 is to prescribe the accounting treatment and the disclosures required in relation to the agricultural activity of a certain entity or those entities that are using or that will be using IAS 41 later on. So when you talk about agriculture or agricultural activity, the concepts or the items that are related to such as provided in the scope of the standard are as follows. So agricultural activity will relate to letter A, biological assets, except for bearer plants. So we will discuss later on the definition of biological assets, and we will also discuss why bearer plants are not considered or are not part of the scope of the standard. Letter B, we will also, or the standard also covers agricultural produce at the point of harvest. And letter C, specific government grants covered by the standard. In relation still with the scope, the standard specifies certain items that are not covered by the standard because they are already covered by a different standard. So first is letter A, land related to agricultural activity, because the land where all your biological assets are located are basically either covered by IAS 16 if that is a property, plant, and equipment, or IAS 40 if it is covered or considered to be an investment property, as what we discussed already last time. And for IAS 16, we will discuss that in detail after this particular topic. Letter B, it does not cover bearer plants related to agricultural activity because it is covered by IAS 16. So property, plant, and equipment covers bearer plants. So we will discuss later on what are these bearer plants. However, the produce that we will get from bearer plants will already be covered by IAS 41. So whatever we harvest or whatever is harvested from the bearer plant will now be covered by IAS 41 for as long as it is still at the point of harvest. Letter C, the standard will not apply to government grants related to bearer plants because of course this will now become part of IAS 20 and IAS 16. Okay? So that's basically how it works. In addition, there are other items, letter D and letter E, intangible assets that are related to agricultural activity because it is covered by IAS 38, as well as right of use assets arising from the lease of land related to agricultural activity because it is covered by IFRS 16. Okay? So those are items relating to or that are not covered by our standard. So further, as part of the scope of the standard is applied to agricultural produce which is harvested produce of the entity's biological assets at the point of harvest, meaning at the instance that we are already removing the agricultural produce from the biological asset. After which, any event after the point of harvest will now be covered by IAS 2. Similarly, IAS 41 does not deal with the processing of agricultural produce after harvest. Because just like what I said, the standard will only cover activities until the point of harvest. Anything that we will do after the point of harvest or after removing or taking the agricultural produce from the biological assets, okay, any activities after that will not be covered by IAS 41 anymore. So the standard provided us with a certain list or basically examples of items that are either categorized as biological assets, agricultural produce, or products that are a result of processing after harvest. So we already know that biological assets are considered as part of IAS 41. Agricultural produce is still part of your IAS 41. But once it is already processed further, it is now going to be part of your inventory because it is already beyond the point of harvest. So meaning any change that we are going to do after the point of harvest, it is now going to be covered by IAS 2 inventories. So these are the examples, and of course, there are certain emphasis provided here, such as, okay, as provided by the standard itself, some plants, for example, tea bushes, grapevines, oil palms, and rubber trees usually meet the definition of bearer plant and therefore will be the scope or will be under the scope of IAS 16. However, the produce growing on bearer plants, for example, the tea leaves, grapes, okay, oil palm fruit, and latex will now be within the scope of IAS 41 for as long as there will be no processing further of the item. Okay? So whatever we get from the bearer plant will be part of your agricultural produce covered by IAS 41. Whatever you do to it afterwards will now be covered by IAS 2. So let us now proceed with the definitions. And actually, there are a lot of definitions provided for the standard. Let us first discuss the concept of agricultural activity. So when you talk about agricultural activity or basically agriculture, it pertains to the management by an entity of the biological transformation and harvest of biological assets for sale or for conversion into agricultural produce or into additional biological assets. So the key term for agricultural activity is the management by an entity. Meaning, although we will be discussing this later on, this simply means that if there is no particular entity that manages a particular transformation or biological transformation, then it is not considered to be agriculture. Like let's say, for example, if you are a fisherman, being a fisherman does not mean that you are in agricultural activity. The reason is because if you are a fisherman and you go to the sea to catch fish, the fish that you are catching was not managed by you. It was managed by the natural activities in the sea. So whatever you are harvesting is not really managed by you. So it is not considered as agricultural activity. The same is true if you are getting fruits from a wild plantation or a wild forest that has that particular fruit. So the fruit that you are getting or that you are harvesting is not considered to be part of agriculture because you did not manage the biological transformation of those fruits or of those plants. And similarly, if let's say for example you got or you are hunting for animals, okay, in the wild, okay, whatever you get there is not considered as agricultural activity or part of agriculture because you did not manage the biological transformation. So the key term for agriculture is you are, or the entity is the one managing the agricultural transformation or the biological transformation of your assets or of those items. Okay? So, aside from agricultural activity, we also have agricultural produce. So, agricultural produce pertains to the harvested produce or products of the entity's biological assets. So, basically, going back to this particular list, the biological asset is the sheep, let's say for example, and the agricultural produce is the wool or the shaved fur of the sheep. Okay? And then later on, okay, if the wool is processed further, then it becomes yarn or a carpet, then it becomes part of inventory. Okay, similarly, if you have a timber plantation, okay, the trees in a timber plantation is your biological asset. Once you cut it down, it is called felled trees. Now, I take note, felled trees pertain to the raw tree that was cut, which was not yet processed for removing the small branches, removing the leaves, etc. Because once you process it further and make it a finer type of wood, considered to be logs or lumber, then it will now be considered as inventory. So, in all of these examples, always remember if you process further a particular harvest, like example, if I have a mango tree and then I harvested the mango, okay, the harvested mango itself is still considered as agricultural produce. But if I process it further, if I process further the mango and make it, let's say for example, mango chips or mango juice or whatever, then it now becomes inventory. Okay? So the key for an agricultural produce to become an inventory item is the further processing of the raw or of the agricultural produce at the point of harvest. Okay, so let's move on. Let us discuss bearer plants. Okay? So again, even though bearer plants are covered by IAS 16, we still need to define a bearer plant so that we can determine if the biological asset that we are maintaining or managing is to be accounted for under IAS 41 or under IAS 16. So, according to the standard, a bearer plant is a living plant. Okay? Bearer plant is a living plant that, letter A, is used in the production or supply of agricultural produce, is expected to bear produce for more than one period. So meaning, after one series of harvest, you're expecting for it to make another set or to have another period for it to produce agricultural produce, and then you can harvest again from it, and then so on and so forth. So meaning it should be more than one period. So most probably there is continuous production of agricultural produce there, and has a remote likelihood of being sold as agricultural produce except for incidental scrap sales. Meaning, the very purpose why you are holding this particular bearer plant is for its produce and not for selling it as an item or selling it as an item of sale. Okay? So these are the three criterias or items that needs to be satisfied. Take note of the word "and" there. So all the three must be satisfied so that we can consider the item as a bearer plant. Okay? So there. Next, we have biological asset, which is defined as a living plant or animal. Okay, so whatever type of plant or animal that you know, for as long as it is still living, it is considered as biological asset. And if the biological asset is being managed by an entity, then it is considered to be under the scope of agriculture in IAS 41. Next, what do we mean by biological transformation? Biological transformation comprises the processes of growth, degeneration, production, and procreation that cause qualitative or quantitative changes in a biological asset. Okay? So that is what we call biological transformation. So generally, any change that happens to a biological asset that results to quantitative or qualitative changes. Okay? Next, cost to sell. Cost to sell are incremental costs directly attributable to the disposal of an asset, excluding finance cost and income taxes. This is also considered as point of sale cost at sometimes or at times. And basically, when you talk about cost to sell, these are amounts that you are incurring in order for you to sell the product. Okay. We go to a group of biological assets. So when you say a group of biological assets, it pertains to the aggregation of similar living animals or plants. Okay? So I don't know, but I think in business law there is a portion where you are you were required to give the definition of the group of certain animals, like what do you call the group of cows, what do you call a group of horses, what do you call a group of fishes. So basically, uh, there are times that you need to remember or to recall those items. So basically, when you talk about a group of biological asset, it pertains to similar animals or plants that are grouped together. Okay? Next, harvest pertains to the detachment of produce from a biological asset or cessation of a biological asset's life processes. So what do we mean by this? When you say harvest, a harvest will basically result to two things. Okay? Number one, it will either result to removing the produce, but the biological asset where it was harvested from will continue to be a biological asset. Okay? Example, if I have a mango tree and I harvested the mango tree will still survive. Okay? However, the second result from harvest would be the cessation of the life processes of the biological asset. So meaning, because of the harvest, the biological asset will now become a dead animal or a dead biological asset. Okay? So meaning, it is no longer considered, or there will be a derecognition of a biological asset. So example is, if we butcher the pig that we are managing, or if we are going to cut the tree that we are managing. Okay? So that's basically how it works. So next, since we are now talking about, since we talked about bearer plants already, and we provided you with three criteria for a bearer plant to become qualified as a bearer plant, let us now have examples of biological assets that are not qualified to become bearer plants. So these are examples specifically provided by the standard. So first, plants cultivated to be harvested as agricultural produce. For example, trees grown for use as lumber. The reason is because if we look into the requirement, the moment we cut down, the moment we harvest, okay, this particular biological asset, it can no longer produce, or it can no longer have another harvest for another period. So meaning, if we go back to the definition of biological asset, okay, it did not satisfy letter B, okay, and it did not satisfy letter C. Although letter A is satisfied because there will be an agricultural produce, letter B will not be satisfied because it will only bear produce for one period only. And it did not satisfy letter C because the likelihood of it being sold as agricultural produce is not remote. Okay? Because The very reason why we manage or why we planted that particular plant, or the reason why we are cultivating or managing that particular biological asset, is for it to become the principal item to be sold. Okay? So let's have letter B. Okay? Plants cultivated to produce agricultural produce when there is more than a remote likelihood that the entity will also harvest and sell the plant as agricultural produce. Okay? Other than as incidental scrap sales, for example, trees that are cultivated both for their fruit and their lumber. Okay? So, I don't have a specific example because I really have no idea as to what kinds of trees we have. But basically, if we have a plant or if we have a tree that is being used both for its fruit and its lumber or its log, then it is not considered to be a biological, or sorry, a bearer plant anymore. So um, I'm trying to think of a certain example for this, but like, because basically, like example, if you talk about a mango tree, mango trees are not really being sold for its lumber or for its logs. So basically, that is considered as a bearer plant. But if let's say, for example, you can think of a tree that is both used or cultivated for its fruit and for the tree itself to be used as wood later on, then that is no longer considered as a a bearer plant. And letter C, annual crops. Okay? Example, mais. Okay? That's maize and wheat or corn. Okay, why? Because for annual crops, after you harvest, of course, you do not expect it produce to produce another season or another period for it to grow that particular product. Basically, if you're going to, when you talk about annual crops, after you harvest, you're going to uproot also the plant because you're going to have another season or another period of planting the seeds. Okay? So if you have annual crops, okay, annual crops like I think even for palay after harvesting, you need to uproot the remaining plants there, and then you're going to have another set of plantation, or you're going to have another fresh plantation after that. So that's basically how it works. Okay? So annual crops are not considered as bearer plants because it will not satisfy letter B of the requirement for bearer plants. And of course, letter C. Because the reason why you are planting that is for the harvest itself, or for the plant itself to be sold later on. Okay, let's proceed. It says still in the definition, when bearer plants are no longer used to bear produce, they might be cut down and sold as scrap. For example, as firewood. Okay? Such incidental scrap sales would not prevent the plant from satisfying the definition of a bearer plant. Okay? So if your eventual sale of the bearer plant is only incidental so that it will not be wasted, okay, then the said sale is not considered or does not mean that it is no longer a bearer plant. Take note that incidental income that we will get from its the recognition does not mean that it is no longer a bearer plant. Okay? And then produce growing on bearer plants is a biological asset, just like what we said a while ago. Um, if for as long as it is not yet harvested, it is considered as a biological asset. Okay? For as long as it is still attached to the bearer plant, okay, it is considered as a biological asset. So, meaning, you can actually value separately the bearer plant and the produce or the biological asset attached to the bearer plant. Okay? So, example, if you have if let's say for example you have a mango tree, let's go back to the mango tree. The moment the mango tree produces mangoes, or there are already mangoes on the tree, you can actually value already, or you can actually already provide a value to this potential harvests. Okay? However, it is not practicable because generally, since we are talking about fair value, you are going to, if you're going to value the biological assets or the fruits that are in the tree, and then you're going to eventually value it again once you harvest it, then it is not practicable already because you're going to have two measurements. What is more practicable is to just record the bearer plant and record the amount of the agricultural produce after you harvested it already. Okay, so that you will only have one measurement. Okay, but the concept still remains: any fruit that is not yet harvested is already a biological asset, and it can be recognized if you want to. But of course, it is not practicable. Next, talking about agricultural activity, we already said a while ago that agricultural activity exists only if the entity is the one managing the activities. Okay? So there are certain examples provided by the standard. Examples here are raising livestock, forestry, meaning you are the one managing the forest plantation. We have annual or perennial cropping. Okay, so basically you are planting the crops for it to be eventually harvested. We have cultivating orchards and plantations. Floriculture, or basically in here in the Cordillera areas, there are a lot who are planting flowering plants. Okay, basically for it to harvest the plants, okay, and sell it, or to harvest the flowers, okay, and then sell it. And we have aquaculture, also known as fish farming. Okay, so again, being a fisherman is different from being a fish pond owner or being a fish farmer. Because if you are a fish farmer, you are the one managing the fishes that are in your fish farm or in your fish pond. Okay, so you are the one feeding it. You are the one you are the one, or the entity is the one trying to do the fertilization process so that there will be no more or new fishes, okay, or fingerlings, what we call the small fishes, so that there will be new fingerlings to grow. Okay, so that's basically how it works. So there are three criterias or three features, okay, that we need to satisfy in order for us to really make sure that we have an agricultural activity. So first is the capability of change, or capability to change. So meaning the assets that we are cultivating are still capable of changing, meaning they can still grow, they can degenerate, they can still produce, okay, they can still procreate, etc. Okay? Letter B, management of change, meaning it is the entity who is responsible in monitoring and managing the changes that are happening in or happening with the assets that they are trying to cultivate. And third is measurement of change. So meaning the entity regularly monitors the changes so that it will be able to, or the assets that they are cultivating or managing are able to meet the requirements for its eventual, or for the eventual sale of these particular assets. Okay? Measurement of change may mean measuring of the age, measuring of the length, measuring of the size of the fruits, measuring the ripeness levels of the fruits or whatever. So there are basically different types of measurement criteria, okay, or measuring the change of these particular assets, because it depends from one biological asset or from one agricultural produce to another. Okay? Like if we go back again to the mango, some entities will sell the mangoes as ripe mangoes, and there will be a different selling price or fair value for that. Some may be selling Indian mangoes, or the unripe or the green mangoes, and there will be a different criteria to determine if they are already um, or they are already ripe enough or prepared enough for its eventual sale. So it's different from one biological asset and agricultural produce to another. Okay. So, when we talk about biological transformation, it will result to the following outcomes. So, if we say there is a biological transformation, what will what will be the results? Okay. So, letter A, biological transformation will mean that the assets will change through the following. First, growth, meaning there is an increase in the quantity or improvement of the quality. Okay, so of course, the growth of plants and animals, okay, differ from each other. So you need to know whether it is growing. Okay, degeneration. Okay, once the growth or the maximum growth potential has already been reached, the next part is degeneration already, meaning the quality and the quantity is already deteriorating. Okay, so that's basically what degeneration is. Or procreation, okay, meaning you're going to create or there will be added or there will be additional plants or animals. In the case of animals, this is when the animal will get pregnant and eventually is going to produce a smaller or a newborn uh, biological asset or a newborn um, animal. And then in the case of plants, procreation is of course through the pollination and through the fertilization process of plants, resulting to more fruits, more harvests, whatever type of harvest that are required. Or it can also happen through letter B, production of agricultural produce, such as latex, tea leaf, wool, and milk. Okay? So these are, or the classification of biological transformation would be from the biological asset itself or through the produce that it is producing, okay, while it is still a living plant or animal. Okay. So we now go to the last part of the definition, which is the general definitions. So of course, we will still have carrying amount. The carrying amount is of course the amount that is recognized in the financial statement, whether that is based on fair value or that is based on cost. Because generally, biological assets and agricultural produce should be measured at fair value, but at times it will be measured using cost. We will discuss that in detail later. Fair value, again, this is based on IFRS 13. We do not need to reiterate that anymore. We have continuously given the definitions and the levels of fair values in IFRS 13. Okay, so it's the same with other standards that are using IFRS 13 for fair value measurements. And then, government grant, of course, these are assets, okay, or um, items that are given to us by the government either unconditionally or with conditions, which is defined in IAS 20. We will have a separate discussion of government grants later on. So with that, we now proceed with recognition and measurement. Okay. So with regards to recognition and measurement, as already discussed a while ago, the entity will recognize a biological asset if the three criteria are met. Okay, first, the entity controls the asset. Okay, so this is a general definition or criteria for all assets. Letter B, it is probable that future economic benefits are associated with the asset will flow to the entity. And letter C, the fair value or cost of the asset can be measured reliably. So these three are the general recognition requirements or general criteria for all assets. Okay, so meaning if the item, if the asset item already satisfies the definitions provided by IAS 41 and it is within the scope of IAS 41, you simply need to check if letter A, letter B, and letter C is satisfied or are all satisfied before we recognize the biological asset or the agricultural produce in that case. So in the case of agricultural activity, how do we determine if we have control over that particular activity or over that particular biological asset? So it says there, it can be through legal ownership, okay, branding, or otherwise marking of the cattle or marking of the biological asset on acquisition, birth, or weaning. The future benefits are normally assessed by measuring the significant physical attributes. Okay? So, of course, most of the, like in certain farms or in certain ranches, okay, animals are labeled, or they are or the proof of ownership is basically from marking. So owners of biological assets will put a mark, a trademark. Usually, some will even use what you call this, a marking device. Okay, just to show that the animal is owned by a particular entity or a particular owner, so that it will not be claimed by another branch or another entity. Okay. So of course, it is hard for you to simply have legal ownership without um, providing a proof that you really own that particular animal. Okay. In the case of plants, for as long as the plant is within your lot area or within the land that you own, there's no problem. The problem is with biological assets that are animals, because animals are moving from one place to another. So aside from the legal ownership, you also need to make sure that you are putting marks or any symbol or whatever device that will identify and separately identify that biological asset from others. Okay? So a biological asset shall be measured on initial recognition and at the end of each reporting period at its fair value less cost to sell. Okay? So this is when we emphasize that cost to sell is important. In our previous discussion for investment property, it is going to be measured if you're using fair value model, you're only going to subsequently measure it at fair value. Cost to sell will be irrelevant. In this case, okay, for biological assets or for those covered by IAS 41, the fair value less cost to sell is the basis of the subsequent measurement. Of course, again, except for the case where the fair value cannot be measured reliably. Same is true for agricultural produce. Okay? Agricultural produce harvested from an entity's biological asset shall be measured at its fair value less cost to sell at the point of harvest. And just like what we said, any measurement, okay, or the measurement that we have will be at the date of harvest only, and afterwards, if there will be changes, it will now be following the measurement requirements of IAS 2 or other applicable standards once we transfer it from agricultural produce to another type of asset. The fair value measurement of a biological asset or agricultural produce may be facilitated by grouping biological assets or agricultural produce according to significant attributes, for example, by age or quality. Okay? So the usual examples that we see in board examinations will be 1 year old, 2 years old, 3 years old, or whatever. So because age, okay, the different ages will provide you with a different fair value. Okay, because it depends on the maturity and it depends on the quality. Okay, so usually a certain age will provide you with a better quality. Okay, similarly um, for biological assets that are measured lower than a year. Okay, so biological assets can be grouped based on the number of days that they are already alive. Okay, like if they are already alive for 1 month, 2 months, 3 months, there will be a different measurement. Okay, so next, an entity selects the attributes corresponding to the attributes used in the market as a basis for pricing. Okay, so of course, we need to understand that the reason why you are entering into an agricultural activity is because you know that there is a market for the particular biological assets that you are cultivating. And the agricultural produce that they will be producing. So it is best that the entity will use the same measurement that is being used by the market so that there will be no discrepancies. It is easier for you to determine the market price or the fair value. Next, entities will sometimes enter into contracts so that they can immediately sell their biological assets or their produce later on. So instead of looking for a buyer only when the biological asset or the produce is already available, some will enter into contracts in advance. Okay, so that they know that once the biological asset and the harvests are ready, there will be a buyer already. Okay. However, we need to be careful because according to the standard, whatever contract price was provided, it should not be the basis of the fair value. It says there, contract prices are not necessarily relevant in measuring fair value. Because most of the time, the contracts that you enter into are onerous contracts. In other words, there will be a an additional expense on our part or an expected loss on our part because the contract prices will result in additional let's say additional costs on our part or additional expenses on our part. So this simply means that even though the entity enters into a binding sales agreement or in a contract, we do not use it as the basis of measuring the biological assets. We will continue to measure the fair value of the biological assets based on the fair value requirement or fair value levels provided in IFRS 13. Okay? So, as an example, if let's say for example, the fair value of all your biological assets subject to the contract that you entered into is 1 million. Okay? So, there is a 1 million fair value or fair value less cost to sell. Let's assume that's everything. Fair value less cost to sell is already 1 million. The contract price you entered into is 950,000. So there is a difference of 50,000. The 50,000 is considered to be an onerous component of the contract, which will be considered as a contingent liability, or if it is already probable, it is already going to be a provision in relation to the contract that you're going to enter into. Okay? So it says in the standard, you will recognize the onerous component of the contract in accordance with IAS 37. So if that is not yet probable, it is still possible, then it is going to be recognized as a contingent liability. So there will be a disclosure. But if it is already probable, then we will provide a provision or recognize a provision on the liability section of our financial statements. Okay. An entity who will incur any financing, cost of financing or income tax items resulting from the eventual cash flow, okay, should not include that, okay, in establishing the biological asset after harvest. It says here, an entity does not include any cash flows for financing the assets or re-establishing biological assets after harvest. Example, the cost of replanting trees in a plantation forest after harvest. Okay? So of course, when you replant, it's going to be an additional cost. But the cost of planting does not necessarily mean that it is going to be capitalizable to the next harvest or to the next biological asset. Because take note, the measurement of your biological asset is not based on the cost that you incurred, but rather it is based on the fair value. So what does this mean? Any cost that we will incur, okay, such as the preparation of the land, okay, prior to planting again, or whatever cost such as the salaries of the persons who will harvest the biological asset, all of those will not affect the measurement of the fair value. of the biological asset or the agricultural produce, because it is simply based on fair value less cost to sell. Those amounts or those items that we will incur are all considered to be expense items. They are not capitalizable. So that makes biological asset different from most of the assets which are initially recognized at cost. Okay. So since we are talking about cost, okay, let us consider it as an approximation for fair value. So cost may be able or may be relevant to approximate fair value, particularly when either A or B happens. Under letter A, if there is no or little biological transformation that has taken place since initial cost incurrence, then we can basically say that the cost is the same as fair value. So example, for seedlings planted immediately prior to the end of a reporting period or newly acquired livestock. Okay? So if we acquired a livestock during December or let's say November of the current year, most probably 2 months, okay, or a few months from the date of purchase will not result in a significant increase in the fair value. So in that case, the cost will be the same as the fair value. Okay? And letter B, the impact of the biological transformation on price is not expected to be material. For example, the initial growth in a 30-year pine plantation production cycle. Okay? So, this simply means that if the period that is needed in order for the biological asset to mature is significant, it may mean that in this particular period, a 1 year change or a 1 year growth may not mean a significant increase in value also. Okay? So, this usually happens to biological assets, particularly trees, that will need a significant number of years before you can harvest it. Like, I think for Nara, even for pine trees, it will need significant number of years before we can really harvest it for us to have a strong wood or a strong lumber or log from it. Okay, so in that case, if I just planted this year from year 0 to year 1, okay, there might be no change. So meaning the fair value in year 1 or in year 0 and the fair value in year 1 might be the same. So in that case, it is okay for us to simply measure it at cost. Okay? Because most probably, a significant change in fair value will only happen after a few years. Or after, let's say, multiple years, like 5 years or in 5-year intervals. Okay, still under recognition and measurement, an entity may use information regarding the combined assets to measure the fair value of the biological assets. So this usually happens in cases where the biological assets are attached to another type of asset. Meaning, to make it more clear, if there are biological assets that are planted in your land. Okay? So according to the standard, you can use the combined value of your entire assets, okay, and separately measure them so that you can get the value of the biological asset. So most of the time, if let's say you have a land or if you have a farming lot, and in that farming lot, you made certain land improvements and there are certain biological assets that are planted. The question there is, how much is the amount attributable to the land? How much is the amount attributable to the land improvements? And how much is the amount attributable to the bearer plant? Okay? So how are you going to do that? Most of the time, the value of the land and the value of the land improvement is automatically available because you know how much it was sold or how much you bought it you know the fair value of the land as provided by certain valuators. So what you're going to do there is to get the combined value and deduct the value of the land and the land improvement for you to get the fair value of the biological asset. So that's basically how you do it. So this is usually done if you do not know specifically the fair value of the biological asset. So it is going to be a residual amount. Okay? So the value of the or the fair value of the biological asset will be the residual amount after deducting the components, okay, that are known from the total value. There. So as an example, if you have, let's say, a land or a piece of farming lot that has a value of, let's say, 8 million, deduct the amount of the lot itself and any land improvement. So if, let's say, for example, the lot by itself is already 5 million and the land improvement was 6 million. So, sorry, the land improvement was 1 million. So, meaning 8 million minus 5 million minus 1 million, the remaining 2 million will be the estimated fair value of the biological asset planted there. Okay? So, that's how you do it. Just so you can properly present them in your financial statement. Okay. So we are down to, I think this is the last part of the recognition and measurement, gains and losses. So this is very easy since we are going to measure the changes in the fair value. Any change in fair value will be recognized in profit or loss. So a gain or loss arising on initial recognition of a biological asset at fair value less cost to sell, and from change in fair value less cost to sell of a biological asset shall be included in profit or loss for the period in which it arises. Now you might be asking, sir, how is it that there will be gain or loss on initial recognition? Okay? So this usually happens once we have agricultural produce. Okay? So if, let's say, for example, the bearer plant was recognized separately, once you get the harvest, it is going to be recognized as gain. So we debit the harvest, whatever harvest we got, and we credit gain on harvest. Okay? Also, when a biological asset gave birth, the offspring of that particular biological asset will be considered as a gain. So example, we have a cow, the cow gave birth to a calf. You're going to recognize the calf as another biological asset, and we will credit gain from birth or gain from it is not considered as harvest, it is considered as a new biological asset. So gain from the birth of new biological asset, or simply gain. Okay, so that's how it works. Also, a loss may arise on initial recognition of a biological asset. So if a gain is possible, a loss is also possible. The reason is because costs to sell are deducted in determining fair value less cost to sell, okay, of a biological asset. A gain may arise on initial recognition of a biological asset, such as when a calf is born. So, what do we mean? Let us give an example wherein there is a loss that arises on initial recognition of a biological asset. So let's say, for example, when there is harvest, okay, after you harvested, you determine the fair value to be, let's say, because it is not yet fully mature, the harvest was only valued at, let's say, 50,000. But then, the cost to sell, okay, the cost to sell was already 60,000. So meaning there is already an initial loss of 10,000. So you need to recognize that because the cost to sell that is attributable to the fair value will result in a loss. So meaning it is possible that the value of the biological asset is still negative. Okay? Also, there can also be an attached or a related loss whenever a biological asset was initially recognized. Example, in this case, when a calf is born, generally there will be degeneration on the part of the mother cow because the value of the mother cow may be reduced because of degeneration. Okay? Similarly, in all other animals, once the like if let's say for example the pig, if the mother pig will produce and produce more little pigs, okay, the the quality of the meat of the mother pig will now be lower. So meaning the value in the market, if you will sell it eventually, it is going to be lower. So you are going to recognize a loss from the degeneration of the quality of that particular mother pig. Okay? So that's basically how it works. So the main thing here is whenever changes happen, you need to remeasure the fair value. And because you are remeasuring the fair value will increase, resulting to a gain, or the fair value may decrease, resulting in losses. So that's how it works. A gain or loss arising on initial recognition of agricultural produce at fair value less cost to sell shall be included in profit or loss. So similarly, all gains and losses will be recognized in profit or loss. And a gain or loss may arise on initial recognition of agricultural produce as a result of harvesting also. So whether there is harvest, there is a newborn, or whatever, gain or loss can always be expected. Now, I think this is the last one already, inability to measure fair value. So similar to what we discussed um, in investment property, it is possible that or there is a presumption that irrebuttable presumption in that case that fair value may not be available. Okay? So the thing here is similar to investment property, in the case of agriculture, although there is a rebuttable presumption that fair value is there, it is more likely than not that there should be a fair value. Because the concept here is, it is impossible for an entity to engage in agricultural activity wherein they are not sure if they will eventually sell the biological asset or the agricultural produce. Okay? So in that case, fair value will more likely than not always be available. Okay? So in this case, if in case only, if there is a remote chance that the fair value is not available on initial measurement, then what we are going to do is to measure it at cost. Okay? So in such case, the biological asset shall be measured at its cost less accumulated depreciation and any accumulated impairment loss. So again, the main concept or the main assumption is that there should be a fair value. And fair value less cost to sell should always be available because it is impossible or it is impractical for an entity to engage in agricultural activity without expecting first or researching first how much they will be able to sell the agricultural produce and the biological asset. But if in case at certain points they do not know the fair value or at initial recognition they do not know the fair value, then they will measure it at cost first. So how much did they spend to acquire that biological asset? So at cost, so cost less accumulated depreciation and accumulated impairment loss, similar to how we will measure PPE, how we will measure investment property. But take note, in this case, they did not provide that residual value should be zero. There is no provision like this, okay, for IAS 41. That is only for IAS 40. Now, once the fair value of such biological asset becomes reliably measurable, the entity shall measure it at its fair value less cost to sell. So from cost, we will shift to fair value less cost to sell now. And once a non-current biological asset meets the criteria to be classified as held for sale, it is already presumed that fair value can be measured reliably. Because you cannot say that it is held for sale if you do not know how it is going to be or how much it is expected to be sold. So that's how it works. So to reiterate, on initial recognition, it may be possible that you do not know yet the fair value. Like for example, previously when the crocodile farming in the Philippines was not yet that established, initially you do not know how much the meat of the crocodile will be worth. Okay? So it may be possible that you do not know yet how to value the crocodile and the the crocodile offsprings and the smaller, or the, what you call this, whatever there is in your crocodile farm. So initially you're going to recognize it at cost. Okay? But then afterwards, once the market is already established, you will now have a better understanding of how much to value the crocodile meat, how much to value the crocodiles in your farm. Okay? And you now start to have a fair value. So in that case, the standard is simply saying that if the market is only an emerging market for your particular agricultural activity, it is okay for you to use cost. But then, eventually, you should not stay at cost because agricultural activity is a progressing market. So, at certain points of the market cycle, there should already be an emerging fair value. So you can now estimate the fair value less cost to sell. So that's what the standard is trying to say. There. Okay? So the presumption of inability to measure fair value reliably can be rebutted only on initial recognition. Just like what I said, because on initial recognition, the market may not yet be that stable, or is not yet that regulated, or is not yet that established. So it is okay for you to use cost. Okay? But that is only for initial recognition. For subsequent measurement, you should use fair value already. An entity that has previously measured a biological asset at its fair value less cost to sell continues to measure the biological asset at its fair value less cost to sell until disposal. So, if you're already in fair value, there should always be a fair value, because it is very remote that an existing market for an agricultural produce or a biological asset will just be gone in a split of time. Okay? So it is usually a continuous market. Okay? And in all cases, an entity measures agricultural produce at the point of harvest and its fair value, or at its fair value less cost to sell. The standard reflects the view that the fair value of agricultural produce at the point of harvest can always be measured reliably. Again, the reason is because it is impossible for an entity to enter into agricultural activity without knowing the benefits of entering into that market or entering into that venture. Okay? And finally, in determining cost, accumulated depreciation and accumulated impairment loss, you will use either IAS 2, IAS 16, and IAS 36, the related standards for determining the costs, the depreciation, and the impairment. With that, we go to the second to the last topic. We have the government grants. Okay? So in the case that the government will give you a government grant which will result to you acquiring biological asset, how are we going to account for it? It says here, and this is of course based on the standard, an unconditional government grant related to a biological asset measured at its fair value less cost to sell shall be recognized in profit or loss when and only when the government grant becomes receivable. So meaning, if let's say for example, the government gave you 10 horses, okay? So it gave you 10 horses so that if let's say for example 10 horses for your ranch, okay? So without any condition, and it will be receivable next week. So once you already established that the government grant is already receivable and you already know the fair value of the horses that you will get, then you can recognize it immediately as a debit to biological asset and a credit to income or income from government grant. Okay? However, it says here, if a government grant related to biological asset measured at its fair value less cost to sell is conditional, okay, including when a government grant requires an entity not to engage in specified agricultural activity, so meaning there is a condition, an entity shall recognize the government grant in profit or loss, okay, when and only when the conditions attaching to the government grant are met. So, if it is conditional, we need to wait for the conditions to be met. So, the terms and conditions of government grants vary. For example, a grant may require an entity to farm in a particular location for 5 years and require the entity to return all of the grant if it farms for a period shorter than 5 years. So meaning you did not meet the requirement and you will now return the grant. Okay? In this case, the grant is not recognized in profit or loss until the 5 years have passed. However, if the terms of the grant allow part of it to be retained according to the time that has elapsed, the entity recognizes that part in profit or loss as time passes. Okay. So what do we mean by this? So if let's say for example, we go back to the horses. So you are going to receive 20 horses with a total fair value of, let's say, 20 million, because horses are practically very expensive right now. So if let's say you have 20 million, the 20 million is the entire fair value less cost to sell of the biological asset that you will receive. However, it is conditional upon you operating a horse ranch for 5 years. Okay? Depending on the condition. If the condition is you need to fulfill everything or else you need to return everything, or you can retain the portion based on the portion that you have already fulfilled, then the recognition will be different. So it says here, okay, so if the term is you need to operate everything, okay, then you need to operate for the entire period or else it will be returned to you. So in that case, what you're going to do is, sorry, to recognize only the said biological assets or the said grant until you have provided the entire service. So meaning, you can only debit 20 million biological asset and credit income from government grant 20 million also after the 5-year period. But in case you can earn the biological assets based on the time that you have already provided or based on the services that you have already provided. So if let's say we will still have the 5-year period, 20 million divided by 5 years is 4 million per year. So meaning, every period, you can recognize a debit to biological asset, 4 million, and credit income from government grant, 4 million. Okay, so every year you have 4 million, and then after 5 years, you will have 20 million already. Okay, so that's how it works. So it depends on the condition. It's either all or nothing or partial recognition. Okay? And then if a government grant relates to a biological asset measured at its cost less any accumulated depreciation and any accumulated impairment loss, IAS 20 is applied. So this means that because there is a possibility that the biological asset granted to us is not really an item that is for sale. Okay? So it may be possible that this biological asset is going to be considered as, how do we put it? Maybe it is something to be protected, okay, like that. So what we need to do is, if it is measured at cost, because you do not know the fair value less cost to sell, because in the first place it is not really held for sale, okay, or it is not supposed to be sold, then the biological asset will be recognized as an item under IAS 20. So again, we will have a separate discussion of IAS 20. But the concept here is, the only difference here is the amount that you're going to recognize. Because basically, if it is going to be at fair value, so if it is going to be at cost, okay, then there will be depreciation there. Okay, how are you going to do the depreciation? It depends on the provisions of the government grant. But obviously, if it is held at fair value less cost to sell, you follow the requirements of IAS 41. Okay. So again, IAS 41 requires a different treatment from IAS 20. If a government grant relates to a biological asset that is measured at fair value less cost to sell, okay, then we will apply IAS 41. But if it is now a biological asset granted to us, which will be measured at measured at cost, then we will apply IAS 20, just like what I said a while ago. So finally, from there, we are now down to the last topic, which is disclosure. So for disclosure, there are separate portions. We have the general disclosures, we have disclosures relevant only to fair value less cost to sell, and disclosures relevant to those that are measured at cost. So the general disclosures are as follows. So an entity shall disclose the aggregate gain or loss arising during the current period on initial recognition of biological assets and agricultural produce, and from the change in fair values less cost to sell of biological assets. So we are going to disclose aggregate fair value, and we will disclose the fair value from initial recognition, okay, as well as other changes in fair value from our existing biological assets. An entity shall provide a description also of each group of biological assets. So meaning, we need to group our biological assets depending on the prescribed grouping. Of course, this is also going to be depending on the market groupings that is being done by the market where we are basing our fair values. Also, under the general disclosures, if not disclosed elsewhere in information published with the financial statements, an entity shall also describe the nature of its activities involving each group of biological assets. Meaning, why do you have this type of biological asset? What is the purpose of these biological assets? Are you going to harvest it? Are you going to butcher it eventually? Is it or are they just for certain purposes? So you need to discuss the nature of the activities. Letter B, non-financial measures or estimates of the physical quantities of each group of the entity's biological asset at the end of the period and output of agricultural produce during the period. So you need to give the physical measures. Okay? So meaning, when you talk about non-financial measures or estimates, so if you're talking about animals, you need to count them. If you're talking about plants, you need to give the specific square meters or the size of the plantation that you have for the plants or for the trees. If you're talking about agricultural produce, you need to give a measurement of how many kilos or what are the weights, what are the physical quantities of the produce that you had. Okay, of course, this is going to be dependent also on how it is being sold in the market. So most probably, and most of the time, if the item or if the agricultural produce is being sold by piece, then the measurement that you're going to provide in item 2 should be in 4 pieces also. If it is by kilos, then you also need to provide information by kilos. Okay? So you just make it parallel with how the market does it. Okay? You also need to disclose the following: the existence and carrying amounts of biological assets whose title is restricted, and the carrying amount of biological assets pledged as security for liabilities for full disclosure purposes. The amount of commitments for the development or acquisition of biological assets, if in case you are planning to buy or to acquire new biological assets in the future. and if it is already committed. Letter C, financial risk management strategies relating to agricultural activity, meaning what are the measures that you are doing in order to protect your biological assets and your agricultural produce from certain risks involved, such as the risk that it will be stolen, the risk that you're going to have spoilage, the risk that there will be losses due to the death of your living plants or living animals, okay, or the destruction of your plantation, etc. So you need to provide that. And an entity shall present a reconciliation also of changes in the carrying amount of biological assets between the beginning and the end of the current period with the following details. So the recognition will show the following: the gain or loss arising from changes in fair value less cost to sell, the increase due to purchase, the decrease attributable to sales and biological assets classified as held for sale, the decrease due to harvest, meaning the degeneration because there is already harvest in the biological asset, increase resulting from business combination, net exchange differences arising on the translation of financial statements, okay, and other changes. As you can see, this is basically similar to the disclosure requirements in investment property. But of course, remove those that are relating to harvest and whatever. Okay? Now, we have additional disclosures, okay, for biological assets where fair value cannot be measured. So letter A, description of the biological asset, explanation why fair value cannot be measured reliably. So again, they look similar to your investment property that do not have fair value. If possible, the range of estimates within which fair values is highly likely to lie, the depreciation method, useful life, and the gross carrying amount and the accumulated depreciation at the beginning and end of the period. So those are disclosure requirements. Moving on, these are additional requirements. Any gain or loss recognized on disposal of such biological asset, those that do not have fair value but eventually you were able to sell it, the impairment loss relating to those assets, reversal of impairment loss, and depreciation. So you need to provide a detailed computation of such. Now, if the fair value of biological assets previously measured at their cost less any accumulated depreciation and impairment loss becomes reliably measurable during the current period, the entity must disclose the following: the description of the biological asset, an explanation of why fair value has become reliably measurable, and the effect of the change. So meaning you need to show also how you transitioned from the cost going to fair value and how come this happened. Okay? So you need to explain also. Now, in the case of government grants, okay, an entity shall disclose the following related to agricultural activity covered by the standard. So the nature and extent of the government grant, the unfulfilled conditions and other contingencies, and the significant decrease expected in the level of government grants. Because generally, if the grant is conditional, it is possible that while you are fulfilling the condition, that the value of the government grant can also decrease from that particular time. So meaning, you need to make the necessary adjustments of the recognition based on the expected decreases or the significant decreases while you are fulfilling the government grant or the conditions of the government grant. So that's the end of the presentation. Okay. Now, for some of you who might be wondering, why is it that we did not see in the standard provisions for the physical change and price changes? Okay. So I'm actually wondering myself, and I tried to look into the provisions of the standard. So if we look into the latest standard, okay, for a while, I'll just try to open it and show it to you. Okay. So if you try to look into it, there is actually still a provision for that. So it is still part of the disclosure requirement with the reconciliation of the changes. It says there in paragraph 51, the fair value less cost to sell of a biological asset can change due to both physical change and price change in the market. Separate disclosure of physical and price changes is useful in appraising current period performance. So meaning, the physical and price changes are still required as a disclosure. It is actually part of the computation that you're going to do in the reconciliation of the changes in the carrying amount from the beginning and end of the period. Okay? So meaning, if you encounter those particular questions, it is still there. Okay? However, it was not emphasized here, but obviously, if you are going to make the computations for, in this case, the price and the physical changes will automatically be included or incorporated in our computation. So to clear that out, the price and physical changes separately disclosed, okay, is still considered. However, it is not provided in the standard whether it is required or not. Okay, it is only said that in such case the entity is encouraged to disclose, okay, the information involving the physical change and the price change, but it is not required any longer. Okay, it is not required. It is highly encouraged only. Okay, so that is with regards to the physical and price changes. Okay, and again, the standard also stated that biological transformation can result in growth, degeneration, production, and procreation also. Because most of the time, physical change also results in the change also in the valuation. Okay, so that is with regards to the provisions of the standard. Okay, so with that, we end the presentation.